so we've talked about candlesticks, we've talked about correlating pairs, we've talked about market structure, talked about trend line, support, resistance. All right. Now, one more thing we need to talk about is chart patterns. All right. These are templates you can use to analyze the market itself. All right. And I think we have two major types of patterns. We have the reversal patterns, and we have the continuation patterns. All right. Now let's look at these chart patterns. All right. First of all, we have the first one, the double top. All right. It's when more of like when market respects, when the first respects a particular area and the market drops down, okay, goes up again and respect that same area again. Okay, it's a sign that market wants to go the opposite way. All right, just having this information alone, putting when it hits the down neckline, okay, it's called a neckline, okay, enter the market here, put your stop loss here, target there, and then you leave it, and then I'm sure you're going to be in profit. Okay, like look at the example now. This is an example. Okay, you cited the first one. Okay, you cited the first top, cited the second top. Okay, and then markets are already at the neckline. You enter your trade here, put your stop loss here, and then boom. You see, to move your target should be the beginning of the trend. Okay, down to the neckline. Okay, it's the same. It's going to be the same way you're going to be having your entry and your target. Okay, just like this now. So once you've entered, okay, you're going to bargain profit. Stop loss is here, and then okay, boom. You see, market goes down up to the starting point. All right, this is a double top pattern. Okay, it's a reversal pattern. Another example of a reversal pattern is the head and shoulders. Yeah. This is another major reversal pattern. Okay, I use this one especially. It's one of the most respected pattern in the market. Okay, so once you have your neckline, market is having, this one is, it's different from a double top in the sense that market is not respecting the same point, consecutively. It's more of like, okay, it respects this area, then it went high, create another higher high, then came down, but did not create a higher, a lower low. It just creates. So market respects this zone here. The market goes higher, then comes down. There's more of like this neckline will act like a support. Okay, to act like a support, then boom, market goes up again. Now this region that is going to be respecting is the same region that was respected here. Okay, now that's another sign that, okay, yeah, you should enter this trade. Putting your entry here, your stop loss here. Like an example now, this is the neckline. All right, we have a trend line that acts like a neckline here. Shoulder, head, shoulder. Entering the trade here, putting your stop loss here, and boom, you see how it looks like. Price drops the same length. It goes up, the same length to drop again. Okay, having this information alone will make you profitable in the forex market. Okay, let's look at one more. They call it the rising wedge. Okay, it's when market goes up, then it starts. It's more of like it starts accumulating into an angular, more of like an angular support resistance zone. An angular channel. Once the market enters that zone, there's a high chance it's going to break out. Okay, so that breakout is what you're going to be waiting for. Is that breakout you want to trade? Okay, now a rising wedge will always remember it's a reversal pattern. Okay, if it breaks out lower, it means it's reversing. All right, if it breaks out lower, okay, then that's when you're going to have your entry. You're going to have your entry here, just like this one. Okay, now at this point in time, I'm going to be waiting to see where it wants to break out. All right. Keeps on making higher lows. Yeah. Then, boom, right here. Once I see it breaks out, enter the trade, put my stop loss over here. And then remember, the same length it goes. That's where I'm going to put my target profit immediately. All right. Now, another reversal pattern you need to know is the double bottom. We talked about the double top not quite long. And now let's take a look at the double bottom. It's more of the same thing, you know. It's actually a double top just turned upside down. So the same principles, just inversely. All right. Now, yeah, same thing. We have a resistance here. Market is respecting this area, you know, first bottom, second bottom, and boom, goes up. You're having your entry at the neckline, putting your target at the same length. It goes down, and then see what happens. Price will always respect it if it's valid. Now, the same thing again, the inverse head and shoulders is just like the other head and shoulder, but now this is inverse, so it's more of like coming from down. It's a bullish reversal pattern. All right, the other one was a bearish reversal pattern, but this is a bullish reversal pattern. All right, so this is the neckline, yeah, the support, the resistance, sorry, the resistance. You have your first shoulder, you have the head area, and then the second shoulder. That's where your entry is going to be at the neckline. Remember, you're going to be entering at the neckline. All right, so once you spot the neckline, you're having your entry there. Your take profit is a little bit higher, stop loss is lower, then boom, you're good. So they all follow the same principle. You just need to study these patterns. You need to have these patterns in mind. You need to know these patterns, all right, so that you can actually see them on your charts. Once you're able to see them on your charts, you're going to be able to trade the market profitably. I'm telling you. All right, so we have another reversal pattern. We have the falling wedge. Okay, just like the rising wedge, but the other way around. Remember, it's a bullish reversal pattern. Same principles, same procedure, same entry, target, and everything. Oh, now let's talk about continuation patterns. All right, it's when, you know, market is coming, maybe coming from the bullish, okay, then it enters a consolidation, then continues bullish. Okay, it's a continuation. It's not like a reversal pattern whereby, okay, if market is coming bullish, okay, then it enters a consolidation, then it goes bearish. All right, that's a reversal pattern, but it's a continuation pattern. All right, you're going the same direction you started from. All right, so we have the first one, the falling wedge again. Yeah, remember now when it breaks higher, okay, it's going to be bullish. Remember I said you have to wait for the breakout. You need to know where it's breaking out from. If it's breaking lower, it's bearish. If it's breaking higher, it's bullish. All right, so same principles. You have your entry here, take profit here, stop loss here, and then boom. Now we have the rising wedge again. We have the rising wedge. It's a bearish continuation pattern. Okay, same principles, follows the same procedures. All right, now let's talk about the bullish rectangle. Okay, market comes, as the name implies, the bullish continuation pattern. Okay, market comes bullish. All right, then enters the consolidation, then entry. You have your entry here, your target here, your stop loss there, and then look at the outcome here. Remember, the same height it starts the trend is the same height you want to have your target. All right, then now you have the bearish rectangle, is just the opposite of the bullish rectangle. All right, same procedures, consolidations, targets. Now we have the bullish pennants. They all have the same. Once you're able to, you know, draw your line, your trend line, you know, for you to understand if it's bullish or bearish. Once you have your trend line stating that, then you just have to enter the trade. Okay, you just try to compare which pattern is it looking like, right? Which pattern is this present chart looking like? Okay, you might go back to the materials that we're going to be giving you, you know, checking it out, which one is fitting, and then take your trade. All right, bearish pennant, same thing. And now that's all on pattern. That's all you need to know on chart patterns. Remember, this material is going to be made available for you, so you can always compare every time on the chart. You can always compare which pattern fits the present chart you're looking at. All right,